Hi everyone, welcome to another Weekly Forex Forecast for the week ending August 21st, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the New Zealand dollar versus the US dollar, as well as gold or XAUUSD. We're going to wrap things up with Ethereum or ETHUSD. It's a cryptocurrency I've talked about several times in recent months, and it's up 90%, but I do think it's headed much higher over the next couple of years. I'm also going to talk about last week's pullback in gold and what it could mean for the broader trend. Alright, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up we have the EURUSD, and the pair continues to consolidate between 117 support and 119 resistance. So this is the second week now that we've seen consolidation between these two levels after this rally back in July. Now this rally back here formed after this bull flag developed that I was talking about on the blog. So I was getting long through this area following the breakout. I told members about this and my average was right around 113. Now I did add a little bit more last week on the pullback, so my average is a little bit higher, but I didn't add that much, so I'm still averaged in just above the 113 area. And I still have that position on because so far I haven't seen any capitulation from the EURUSD. Instead, we're just getting this ranging price action between 117 and 119. So as long as we continue to hold up relatively well and stay above 117 and especially that 116 area that I've talked about now for weeks, I'm going to stay long the euro. And the reason I mentioned the 116 area specifically is because if we look at the monthly time frame, this is something that I've talked about for months, where we have this multi-year wedge pattern or triangle that extends from the euro's all-time high. So as long as the pair stays above that 116 area on a monthly closing basis, I'm going to stay long because to me this looks constructive. Now of course, if we do start to break down and close below the 116 region, that of course would signal that the recent bullish breakout was false and the euro is headed lower. But again, as long as we stay above that 116 region, I like the idea of buying the EURUSD on dips. Now, in order to send it higher above 119, we need a daily close above 119, which would expose the 120.90 area. So 120.90 is going to be the next key resistance that I keep an eye on if we do see a daily close above 119 over the coming weeks. But given the velocity of this recent rally, don't be surprised if we do see another week or two of ranging price action until we do get a breakout. The pound continued to battle with that 131.60 resistance area last week, which is that confluence of resistance that I talked about where it's this multi-year trend line and also a key horizontal level. So the pound needs to get above 131.60 in order to expose that 135 area. So a daily close above 131.60 could take the pair as high as 135 over the coming weeks. Key support for the week ahead remains that 129.80 area. And just like the EURUSD, we've seen this rally through this area, but then ever since we tested 131.60, the pound, instead of just selling off from here, we've seen this sideways movement. Now to me, anytime I see this, especially right below a key resistance area, this to me signals an imminent breakout. That's not to say that it will happen, but as of right now, I'm not seeing a lot of weakness from the pound, which indicates that over the next few days or even weeks, we could see a break above 131.60 for a move up into 135. Now, alternatively, if we do see a daily close below 129.80, that would signal weakness and also expose the 128 region. But as long as this short-term uptrend is intact and we're not seeing a lot of weakness from the pound, I don't like the idea of shorting this pair. Instead, I like the idea of looking for bullish price action from key support or a daily close above 131.60 to take us up to 135. The New Zealand dollar has pulled back in the last several weeks following its retest of the 67.20 area. However, I wanted to start out looking at the weekly time frame here. In fact, this is all I'm going to look at because the daily time frame is getting a bit messy. So looking at the weekly time frame, you can see we have this trend line that extends from the all-time highs. And in fact, if we look at the monthly time frame, this was a wedge pattern or triangle similar to the EURUSD. But unlike the euro, we didn't have a false break like we had on the New Zealand dollar. So if you notice, this trend line that extends from the 2000 lows was actually broken back here during the March sell-off. However, June's close back inside this pattern signaled that this indeed was a false break. And as I've often said, a false break to one side of a pattern often triggers an extended move in the opposite direction. So for the NZDUSD, that would mean a move higher. Now, as of right now, we've seen a retest of 67.20 resistance. However, the pair is just now retesting the top of that wedge pattern as new resistance. So I think that sellers have to be really careful here trying to sell the New Zealand dollar, because as of right now, that area right around 65 is going to be critical support. So notice too how if I draw a horizontal level right there around 65, you can see that not only is it the top of this wedge pattern, but it's also a horizontal level. So notice how it served as resistance back here. It then served as support on this candle. All right, so as long as 65 is intact as support on a weekly closing basis, you have to be careful trying to short the New Zealand dollar. Because as of right now, the narrative that this was a false break, and we've since had a move and a breakout above the top of this wedge pattern, and now we're retesting this area, still stands. So until we get a close back below that 65 area, there's no reason to be shorting the New Zealand dollar in my opinion. Now that could change, but if 65 holds up, expect another rotation into that 67.20 area with a close above that, taking on some of these highs that we saw back here in 2018 and 2019. And as of right now, I would say those highs come in just below the 70 handle or about 69.40. So if you saw last week's post on gold, you saw the 45-year chart that I posted that showed a long-term uptrend, but also the fact that all of this price action through this area between about this 2010 to 2011 area, all the way down here to 2016, was really just a continuation pattern in this long-term uptrend. Furthermore, gold is still holding above that previous all-time high right around $1,900. So this is something I mentioned last week, where before we had this capitulation on Tuesday, I said that we could even see a retest of $1,900 because that would act as a backfill of this previous all-time high. And sure enough, that's what we got. Now, I didn't know that it would come as a 5% loss in a single session. However, all in all, despite this candle, the trend here is still pointed higher. And in my opinion, anybody trying to short gold here isn't looking at the big picture, because the 45-year trend is pointed higher, as is the short-term and even intermediate trends. So everything is pointed higher here, and I see this as nothing more than a flush of weak hands. So Tuesday's session cleared out all the people who were buying through here and not even paying attention to price and also over leveraging their accounts. So a sell-off like this helps to clear out the weak hands and reset the price to move higher. Now, as I mentioned last week, the 1940 area is going to be support in the near term, with key resistance coming in at 1980. So you can see that 1940 was support back through here, and Thursday's session closed above it, and Friday found support at 1940. Now 1980 was resistance through several candles back here, so it's logical to assume 1980 could attract some sellers. And as I mentioned to members last week, anything below this 2075 area, now that we have this swing high in place, anything below 2075 is really just consolidation. So we can use this range that we have now between 2075 and 1900 to identify a potential continuation pattern. So let's say gold moves up here and starts to do something like this, right? If we do see that, we know that this could be a continuation pattern in the form of a wedge or triangle. So in the near term, again, look to 1940 as support, 1980 as resistance, but the overall trend here is pointed higher, so I have to caution anybody selling this that you're going against the grain. Now, I could be wrong, and the only way that that's going to happen in the near term is if we do see a daily close below $1,900. However, even if that happens, I wouldn't be willing to go against a multi-year trend like this just because we get a daily close below $1,900. So for me, gold has been an investment since April. I've been buying the gold miners, and I haven't sold a single share yet, and I don't plan to for quite some time. But if you're trading gold, again, 1940 is support, 1980 is resistance with a close above that, taking on the 2070 area. So I first talked about Ethereum, or ETHUSD, back in June. It's a cryptocurrency that I started investing in months ago, back through the $230 area. So the first time I talked about this, we were breaking out from this multi-year falling wedge pattern. Now, this pattern came after the pair had rallied back here in 2017. And if you're familiar with Ethereum, you know that during this first cycle, it went from a low of 42 cents all the way to $1,400. Now, that's a move of over 300,000%. So it was a massive rally. And we've since had several years of consolidation, and we're now breaking out. Now, not only was this significant in that it was breaking out of this pattern, but this latest move also carved the first higher high in this series. So notice back here, we had this higher high, and that was the last one in this series. Then we had a series of lower lows and also lower highs. All right, so notice how this high, even back here, didn't take out this high. Same thing with this breakout. We were still carving a lower high. Notice how this is trending lower. This right here was the first higher high in this series of consolidation. So this is a significant move from Ethereum, and my position is currently up about 90% from the $230 area. Now moving forward, just like I mentioned on the blog recently, I do think that 350 was the key level to watch. However, if we do close above $400 this week, $400 is going to be the next key support area to keep an eye on. So notice back here, 400 was resistance. It then turned to support and support once again. So 400 would become support and 550 would be the next key resistance. So notice back through this area, 550 was support. It was support again through here. It then closed below it and 550 became resistance. All right, so $400 and 550 are the key levels to keep an eye on. However, I do think a move up into $800 could come later this year. But as I've mentioned many times, Bitcoin, Ethereum, and VeChain are all investments for me. I'm holding these for multiple years. So I do think that $400, $500, even $800, this is all just the warm-up phase for Ethereum. Remember that this rally back here was over 300,000% worth of gains. So to look at this right now, that we're breaking out of this multi-year pattern and shoot for 90% or even 200%, in my opinion, you're underestimating where this is going. So I think it's going to go much higher than $800, even $1,400 over the next couple of years. But that's just what I'm doing. You have to do what's suitable for you. Whether you invest in this or trade it is totally your decision. But I do think that $400 is going to be a key level to keep an eye on, as is $550 and $800. And if we do see a close back below $400, look to that $350 area, because that's going to be the key support that must hold. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.